Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. We are starting off looking at the Qs, which is basically the NASDAQ ETF, QQQ. And as I do each and every week, I left my lines on the chart so you can see how the forecast worked out. And with the NASDAQ market here, we hit the target precisely right on the mark. You can see that last week, Friday, right here on this little candle, I started my recording and put it out. And remember, at that time, none of these candles were here and none of the data down here was in place. And I said that early in the week, meaning this week, the markets would go up and then start to pull back. And look at that. Monday, big green candle. Tuesday, we went up here and we tested resistance right at the high right there. Wednesday had a little bit of a candle. Thursday, big red candle right there. And then today we closed below that 20-period moving average on higher volume. Now don't be fooled by this green candle right there because it is a close below the 20-period moving average, and the increase in volume on the way down tells us that the sellers are still motivated. So again, that is known as a spinning top, not quite a hammer pattern, so it's not bullish, it's a spinning top. So what I think we're going to see next week for the NASDAQ is I think we're going to see a little bit more of a pullback. And then, believe it or not, I think we're going to move up to test this moving average right there. And I'm going to leave all these lines on the chart so you can see week after week how accurate. Remember, the week before last said same thing. The pattern was the same way. Move up early in the week, pull back. Last Friday we closed right on the target. Said we move up early in the week, pull back, close right on the target again. But this one's going to be a little bit different. I think early in the week we're going to see a little bit of a sell-off. And then I believe that the NASDAQ is going to try and recover. Now, here's the key, and you have to watch this. If the NASDAQ goes up and fails to get over that 20-period moving average, that's known as a kiss of death. I have said that several times. It's really not as morbid as it sounds, but a kiss of death is when the markets try to revive itself but fails, and then the price just dies afterwards, and then you see another downturn. That, in a lot of cases, is a topping pattern. You can see if we continue to go lower, this could be translated as a double top formation, which is a reversal pattern. Remember, last week, when I pulled up the monthly chart, I talked about how extended this market is, right? If we close lower next week, this monthly candle is going to have a smaller green body with a long shadow above it. That would be an inverted hammer, which is extremely bearish. And then next month, as we get into August, we could see lower prices. So again, I'm not in a big rush to buy any new long positions, but if you are thinking about buying anything, I would be very, very cautious and keep your stops pretty tight. Okay, so now let's look at the diamonds. This is the Dow Jones Industrial Average ETF, ticker symbol DIA. I said we would go lower. Again, Friday being here, there was no candles here, there was no data here. I said we would go lower. Now we did that. We didn't hit my target, but we did move lower, and I think that we're going to continue lower. In fact, I'm going to erase all these lines so you can see what the forecast looks like for next week. This resistance will most likely hold, and I think that the diamonds are going to start off the week lower, and a possibility that it'll start closing below that 20-period moving average. In fact, I think we could even see a little bit of a bounce here before going lower. But the reason I think we're going lower in the start is because if you look at this, I'll zoom in here for you, that is a cross on the stochastics. That is a sell signal there. And if the CCI, this blue line, crosses below that black line right there as I magnify it, that is a momentum change, and that zero line is known as a momentum line as well. So if we cross below that, we could see a prolonged sell-off into the week next week. All right, so keep an eye on that. Now I'm going to hop to the VIX because the VIX and the S&P are inversely related. So I'm going to start off with the VIX, and you could see that last week, again, none of this data was here, I said the VIX would most likely rally and bounce off of this support level. See that horizontal line down there? I said that we would go and test that, and it did. And to the penny, it held. And then yesterday, Thursday, right here on the 23rd, we had a bullish engulfing pattern with a follow-through red candle. Now, the VIX did not close over that 20-period moving average, but I think next week it could. And this is what I'm forecasting for the VIX. I think the VIX is going to go up to test this resistance right here. And if that happens, that is bearish for the market. Remember, the VIX is inversely related. Last week, I drew this line. See this? For those of you that followed that report, you might remember that I said the CCI would most likely move up and cross with a buy signal. And guess what? Look at that. The VIX did that. The CCI did that, and it crossed right here. On Wednesday, it crossed. So now the VIX is headed towards this momentum line right there, and I'm going to even draw that. I'll erase this, and I'll forecast again what I think the CCI is going to do. And so when you see a bullish VIX, that means you need to be, again, extremely cautious with any long positions on the S&P. So let's go to the S&P, ticker symbol SPY. See, I said that we would go lower. We came up to this resistance point, failed to stay over that, and came back down. Now, this is where we start to get into some mixed signals. I'm going to erase all these lines to really clean it up for you. The S&P, with this little doji right there, is telling us that we could see a little bit of a bounce because dojis are usually found at pivot points. So even though I think the VIX is going to go higher, I think the S&P is going to go a little bit higher first before going lower. And so that's what I think the 5-day forecast is going to look like for next week. All right, as we approach the end of July, again, we're going to keep an eye on these monthly candles right here. Look at the SPY on the monthly candle right there. So I zoom in, look at that. We have 1, 2, 3, 4 green candles in a row, right? But look at the volume. I do not think next week volume is going to cause that bar to exceed last month's volume. So a drop in volume on the way up is bearish. And again, we have major resistance up here at the S&P, resistance point right there, right around 340, right? So keep an eye on that. Keep an eye on the news. As hard as it is to watch news these days, be really mindful that investors do not like uncertainty. There's a lot of political news, there's a lot of economic news, and my gut is telling me that there's going to be another push down on the market. I just think that this data is being used as a weapon. I think the president has put himself in a very vulnerable position, more or less staking claim to the success of the market. Well, you know, I put word out to some of his advisors. I believe that that was a mistake. I think you should put your neck out like that, because now the attack is going to be on the market itself. Because if the president is judging his success on the stock market, then that is leaving him open for an attack on the stock market. You got to be careful. There's a lot of people involved here in the market. Me, you, everyone else, whether you're Democrat, you know, conservative, it does not matter. The market does not like uncertainty and does not like political turmoil. So if you look at the intraday or the daily chart here, you can see that we're at a top. If we start breaking down or breaking out below this 20-period moving average, let me get back in there and show you that. If the prices start closing below that moving average, we could see a lot lower. And again, I'm putting that out almost as a longer term forecast for those who are trading, especially the spread traders out there. Keep an eye on that and make sure you're extremely defensive, okay? Now, finally, if we look at the Russell 2000, this is a more broad-based index, small cap stocks and such. Said we would go lower. We did not do that, but I'm going to just move this out and extend it to the right. I think the Russell 2000 will, in fact, move lower, and I'm just going to push it out to the right. Same angle, same everything, same target. Look at the stochastics right there, is just about to cross with a sell signal. And today's action was very, very close to a bearish engulfing pattern. This spinning top slash doji is usually found at pivot point. So I think the Russell 2000 is going to go lower. I'm going to leave that target right in place with the end of that line being my target. And I do believe that the CCI is going to cross down below the 0 line, giving it that extra push to the downside as momentum picks up on the sell side. So that's my weekly market report. Hope you're enjoying this. Please give us a thumbs up. Put comments in there. I love comments. You know, every now and then I get people, you know, some put, I think I had 2 people put a down arrow, down thumb, whatever that is. I don't understand when you're hitting perfect scores and hitting targets. I guess some people don't like when I'm hitting my numbers on the mark. But for those people, those couple of people out there, put your comments in there. I'm not going to bite your head off. I would like to know what your questions are. I would like to know what maybe even your disagreements are with the analysis. Maybe I could help you learn how I'm looking at the charts. I've been doing this for almost 40 years, and you know the forecasts are very accurate. Not always right 100% of the time, but in the high 90s as far as percentage of accuracy, and it's hard to beat. So again, the main point for this week's alert is to protect your downside, protect your profits. When the signals and the prices start rolling over, there's no reason to force long positions just for the sake of trading, right? If you look at the Russell 2000 down here, we still have a gap below the market. You know, that could wind up filling, and then maybe we'll see a bounce after that. But right now, as it stands, that is my forecast. I'm going to get rid of this line here, and I'm going to get rid of this line here because the gap fill support is going to be a support level. Clean the charts up for you, and then I'll be talking to you next week. Have a good weekend. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.